All right, guys, welcome to April 19th pre-recorded Zoom. Hopefully I don't have any mic issues today. I will be checking. So I have like a loose cable, and I explained this on Friday, but for the people that were pretty much asking about Tuesday's Zoom, yeah, I have like a faulty cable, and if I move it a little bit, it'll like completely like just disconnect it and then reconnect it. So I'm gonna just leave the mic in one spot this time. But yeah, continuing Friday's lecture. So we, in general summary, right, what we had mentioned last week when we were around, I believe here, or maybe it was like a week and a half ago, anywhere around here, where we pretty much have a reaction within the POI, making the POI valid, but we were still anticipating price to continue higher in the medium to longer term, just because of the whole argument of continuations versus reversals. And you really just want to, I really just want to emphasize that these weekly candles, these daily candles are all, composed of these smaller time frame, these intraday moves, right? They're what compose these candles. They're what create these candles. That's why it's easier, not necessarily easier, but it's much more straightforward to predict a weekly bias based on an intraday stance, right? So from the intraday stance, we understood that we were still bullish, and that's pretty much where we still are. We had confirmed last week around Friday that we had that structural disruption to the upside, so we were essentially looking for a dip before continuing higher. But unfortunately, we did not get that dip, right? The solidified low was solidified after that break of structure. And as you guys know, with these Zooms, I try to look at price for what it is at the moment now and try to make a judgment based on now, right? But obviously, we don't have the data that's coming forward next week, so we can't make any more assumptions. And you guys know that once we've seen a confirmed reaction, it's a lot harder to justify, this, only because you would need a bearish transition and a lot more things would need to align. I'm not saying that you wouldn't need a just a bullish transition even if we didn't have that reaction. I'm just saying if we even get that reaction there, right, there's still a chance that we can do something like that. Right, and that's why I don't like seeing reactions after, or I don't like seeing my POI be hit after the reactions have been confirmed. It's just not, it's been really, really inconsistent to me over time. But I'll actually delete this now. So we have our bias set, and it's going to be interesting because I don't like this, if I'm being completely honest. I don't like this. I don't think this will pull something like that. It really looks like we could maybe see a dip soon, or just some sort of recovery, just because once we zoom out, we have been overextended for a pretty long time now, and you guys know that usually when we see these overextensions, these just long periods of bullishness, right, you see the corrections start to begin, right? The corrections may last anywhere from 2 months to maybe a couple weeks to maybe another couple of weeks. So as of now, we are technically within a impulse, and when I'm trying to look at this impulse, trying to see not necessarily a distance matter, but for the most part, you do see similar moves happen within the market, as you can see here, right? You can see the market it is pretty much making relatively the same distance in terms of impulse, right? So we could see a push higher, and if we actually do meet anywhere up here, I wouldn't necessarily look for a bearish transition or a bearish POI, because any dip there is really just a buy for me to pursue these targets that we had been mentioning last week. So over the past couple of weeks, we have been bullish, and today nothing has changed really. Looking at EURUSD as the immediate effect of that, there has been signs of potential bullishness. I will say that. But something I don't like, especially with this flag pattern, like we said, we would have wanted the flag pattern to give us some sort of recovery into a discount, so we could propel, we could see price propel further lower. And unfortunately, that's just not been the case. But the issue here is that liquidity has not been swept, so that's a bit concerning because it's harder to justify this, right? Even though there is a lot of supporting confluences for a bullish perspective. And just judging based on how DXY has already taken out our liquidity, who's to say DXY won't do the same, because technically liquidity was partially swept there. You could see one more final push, and that final push could just dip EURUSD. I mean, it could dip EURUSD lower, and you could get a discount. And the reason why I'm even considering that bias, which would, you know, realistically, if I'm looking for that type of reference point, I would go probably around there. And the only reason why that even makes sense from the perspective of the structure, well, obviously here we have, let me change the color. We have obviously our internal structure, although we know that we are already bearish. So we've already made our structural ranges. We've already solidified points here, and that has been taken with momentum. So that is obviously signs of an internal liquidity grab, internal momentum, right? And with supporting the momentum is the recovery afterwards, which is very, very flag-like. So I don't necessarily want to force this. Just depends on what time we would see that notification. But once we see, you know, any type of reaction there, it honestly makes a lot of sense for this to, you know, give us a bit of a pullback. Now, whether we reverse here or we just continue higher is a completely different story. I can't make that judgment yet. But as of now, although I don't necessarily like to see liquidity not be swept, it has been swept in DXY. And as we know, DXY is more of the driving force of EURUSD and not vice versa. So yeah, I wouldn't be surprised to see, you know, maybe one final dip, and then maybe give us some decent moves to the upside. And I mean, just looking at the price action, it looks like it could give us some sort of recovery, at least for the short term. But yeah, I mean, other than that, it's been super cool. Super chill. But yeah, let's see how tomorrow goes. Not necessarily, no real trade scenarios today. I was observing and I was kind of wanting to lean towards this type of buy here, but whenever I'm looking for these massive reversals, I do generally want to see that bullish transition on a bearish pullback, because at the moment, I'm sorry, right, we are technically bearish, right? Why? Because our pullback started there, right? Our pullback came back into, let's say, 50% of inefficiency here, right? This, right, created an internal reaction, then failed, right? Meaning this is our sign of optimism. So once that fails, that's a bearish structural disruption, right? And actually, when I was looking at it this morning, I probably would have sold here. I wouldn't have wanted to necessarily buy around here, right? More so just because structural disruption, that's significant. I mean, that's very significant because it's technically a liquidity grab internally, and that is in alignment with our overall direction. So, and that would have been, you know, more so looking to target the X, right? And that's just would have been my more, this would have been my more high probable scenario, just because there's model involved, there's structure involved, and there's a target in place. But unfortunately, we just didn't get that this morning. But yeah, looking at AU, this one's actually starting to dip after what we had mentioned. I believe last week there was a bias where pretty much we had explained the fell flag pattern, which was pretty much here where we stalled, went for liquidity, went for structure, went for whatever we went for, and then immediately caused the liquidity grab. And that is pretty much what has given us that bearish narrative over the past over the past week or so. We just haven't had that real recovery. So I would like to see that soon. I would personally really like to see this premium start to be reached, right? Because if we're looking at what our solidified range would be, our solidified range, right, I would say is here into here. And there's obviously the internal structural ranges as well. Right, and because from here, high into low, high into low, high into low. First time we've seen a preliminary structure break, so that pretty much solidifies that range there. And this is pretty much where our liquidity grab happened prior to. So we've already seen our structure, where our structural range is. We've already seen, now we can see more of our order flow stance. Where are we pretty much going in terms of mitigations? Mitigation, right? And this looks partially efficient, and I would argue that's probably H2, maybe H3. Yeah, you can see that's efficient, right there. Efficient, So realistically, anywhere in this general area is pretty much relatively where I would like to see a pullback, and that would be a very, very big swing back down to at least, I would say, here. All right, and this is just pretty much what I'm seeing. The reason why I'm also looking at this, right? If I'm seeing structure, if I'm seeing price do this, right, then there's something occurring here, right here. Right, there's obviously something occurring here, so it would make sense from an order flow stance as to why we would recover before propelling lower, right? And this is pretty much showing to me not necessarily that there's, not only that there's money involved, but there's bullish reactions internally. So there's obviously breaks of structure from a scalp perspective inside, meaning there's some type of bullish order flow in play, but it's just not sufficient enough to make us change the bias, or to make us, or to even propel price higher than a previous major structure point. So because that failed, that obviously it's not going to go in one direction, it's going to go in the other, and that's in the trending market. If we're in no man's land, that's a completely different story, right? But yeah, now that I'm seeing this, while I'm seeing this, there's definitely breaks of structure internally here, meaning there's some sort of volume in there. So I'm trying to catch that volume as a form of liquidity to pretty much get a trade that will propel price lower based on the narrative there, right? So as of now, that's pretty much what would make sense. I'll actually leave that, and we'll come back on on Friday, and we'll pretty much review from there. But with that being said, not much to say today. It's been a pretty slow week so far, but let's see if we can actually get these recoveries and start getting these bigger swings for the next 2 to 3 weeks. But yeah, with that being said, I'll see you guys on Friday. And mic is working, right? Yes, it is.